Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Fisker, ticker symbol FSR. And so I just wanted to give an update on the chart because it kind of has been trading sideways the past few weeks. I just wanted to give an update. So basically what you can see here on the chart, I have this downtrending channel highlighted in the shading, blue at the top, red at the bottom of it. And so basically, since November 20th, price has more or less resided within this channel. It is downtrending. Downtrending channels tend to break to the upside, so I do think that is a good thing. However, there is a bearish sign that I will go over in a minute, so I think it's good to be cautious with this because it could start to make new lows again. But regarding this downtrending channel that we see price coming down here, we also see higher lows forming in the RSI, whereas we have lower lows forming in the price, at least in this region. And that is bullish divergence. So I think there is some potential along with the downtrending channel for this to break to the upside. However, there is one thing that I did notice too that is based on this red line at $1.41, which represents the lowest close so far, and that was a close on December 6th. Which actually had a low of $1.40 on the day, but we have not seen any closes following that lower than $1.41. The closest we got was on December 20th with a close of $1.42. So pretty close there, but it is a higher close. With the current price now at $1.46, kind of teetering around that level, I'm hoping that it breaks out to the upside. But one thing that I do want to point out, this downtrending line, this red line, does suggest that this could be a descending wedge where we see this downtrending line at the top, but a flat line at the bottom. Descending wedges tend to break to the downside. So if $1.41 is breached and we do get a close below $1.41, I do think that it could go further. I think it could hit a lower low, with the current low being $1.35. I think we could start to move into this red part of the channel, start to trade around there. So I think that's something to be cautious of. Also, do want to point out, looking at the volume profile here on the side, the current price looks like it's at a level where there has been a lot of consolidation. There's been a lot of price action in this region. And so we can see that over here. So will that play out as support or resistance? Kind of tough to say. But in regards of this downtrending line and the flat line in the bottom, you can think of that as this flat line at the bottom has been tested multiple times, and eventually it might break lower. Whereas this downtrending line has been tested multiple times as well, but it's being tested at lower prices. So you're not retesting the levels that are, at $1.80 or so up here. You're being rejected lower. So eventually that's going to push it lower. So I do feel like this overall might be taking a dip over the course of the next week, might be revisiting $1.35. Also thinking about this, if it does move to the upside, I do have this orange line here at $1.58, which is pretty close to the 21-day moving average at $1.61.3. So I do think that's going to be a pretty important level for the price to break above and hold. Pretty close to it right now. That level does look like it's actually at the top of this channel, but we need to break above that and hold in order to have some bullish action going on. I also mentioned right around $1.80, $1.83 here marked in yellow. That represents the close on November 27th. And really, these lines that I have, these horizontal lines, they kind of represent this like kind of stair-step pattern where there's kind of a big move down and then it consolidates, big move down, consolidates, big move down, consolidates, big move down. And so now we've just been like consolidating for a while. We did have this big move down on the 20th when price dropped more than 10% on the day, but relative to these other bars, it is smaller. So hopefully that does result in breaking out of this downtrending channel. This bullish divergence does play out, but it is quite possible that these red lines that make up the descending wedge could play out and we could get prices lower than $1.35 in the next week. Hopefully not. Hopefully we break above the 21-day moving average, closing above $1.61. That would be great. And if you found this helpful, make sure you like the video, share your thoughts in the comments below, and subscribe to the channel for more content like this. Thank you so much for watching.